and welcome to India Market Open. It's Tuesday morning and the setup looks so much better this morning than it has over the last few days. Very smartful recovery on the street yesterday. 22,000 has been held in how? In fact, 22,100 got taken out and we pretty much closed at the day's high point. So if you were a trader on the short alongside, I guess you would have made a little bit of money.
Yeah,
or made no money because these are difficult markets to trade, right?
Maybe some people just left off because VIX is still higher and that's a bugbear. But frankly, in some sense, right, the possibilities of this happening because the FI selling getting over, Amit Shah, Narendra Modi coming out and reiterating the strength.
I mean, those are strong statements. Go out and buy the market because post 4th of June, it's going to go northward.
Remember, he knows markets better than most people.
Most of us, right?
I mean, just to be tempered with the fact that as a politician in election season, you have to be
say those things.
It's much more like management after their results, no matter what the numbers.
It's looking good.
But
Unless you're Tata Motors.
But having said that, it is a cue that the market definitely took and moved on with.
You can argue that, or you can also argue as a devil's advocate that if we went out on a limb and said that the markets did not go down because of the voter turnout, the markets haven't turned back as well in full fashion, even though some fashions of some quarters of the market may have liked. But selling getting over, ebbing a little bit. I mean, we saw a large sell number yesterday as well. I would reckon at some point of time
this will turn. It's too early to tell that things have changed. It is, I think the consensus amongst most technical analysts still remains, it is a sell-on rally. So it is going to be a very tough market to navigate.
So Niraj, just continuing with the apna time aayega. He's saying at some point the selling changes. Before we get to everything else, guys, I just wanted to take a second to talk about what happened yesterday in Mumbai. And I know we always talk about markets, economy, making money. At the end of it, it doesn't matter if this is your quality of life. And why am I talking about this dust storm? It's not just about the traffic that perhaps many of us got stuck in. The fact that because of dust storms, a hoarding can fall, 100 people can get trapped under it for hours, and 14 people die just on their way back home in the financial capital is just something I find very disturbing and shocking. So even as we, speak about economy, incomes, at the end of the day, it's about improving your quality of life. So what does it all matter? You could be driving any car, you could be making as much in your portfolio, but if you can just lose your life coming home under a falling hoarding, it's just shocking. So just wanted to take a second to address that, and of course our condolences to everyone who was hurt, injured, and lost a loved one yesterday in the financial capital. Now, having said that, let's move up to the global trade setup of the day. And that sort of winning streak of the Dow was snapped. Remember, it's their longest winning streak this calendar year since December. So a bit of a breather over there. The Dow ended lower. The Nasdaq was the only sort of winner, mildly in the positive territory. But what is concerning them is a whole host of consumer sentiment data, which is being put out by various agencies, the latest from the New York Federal Reserve, which shows an anticipation of increased inflation. Now, you have to understand what this data really is. It's a consumer sentiment set of data. It's also a data-heavy week for the US markets. You're going to have producer price index, you're going to have consumer price index coming in, and all those gauges are anticipated, because if the market has run up, the US market has run up the last 9 trading sessions on the bet that there will be 1 or 2 rate cuts starting September, then you need the data to back that theory. And that is what we're going to be seeing this week. The bonds also remained a bit tepid, I would say, ahead of all of this anticipation, the 10-year Treasury at 4.48%. But one story that caught my eye is GameStop. And I mean, what a story. This is after Roaring Kitty, this one social media activist for GameStop in 2021. After 2021, he made his first comeback, and I don't know if you guys saw that video. It's just a collection of pictures from Wolverine's scenes coming back with his claws. So this guy called Hello Kitty has actually put out that one video, and just that one video had the stock rallying 110%. I mean, look at the power of social media. So GameStop was an interesting story. Crude not doing much. The Brent at about 83 a barrel, even as all of that data sector is expected, so no big moves there. I'll just quickly pull up Asia and the implied open for India. So we had the CPI data come in yesterday in India, about 4.8, in line with expectations. No big story over there, but mixed cues overall as far as Asian markets are concerned. Let's look at the implied open just for a second to see how we are set up. And yeah, this is the trend that we've been seeing, isn't it? Mildly up in the green, about 58 points. Whether it stays or not after that then becomes the big question. What's the big move we see sort of mid-morning? And just one more data point we should see in light of what we've been seeing as key factors is fund flows and what the fund flows were like yesterday. What really drove that recovery that we saw in the latter half of the day? Definitely not FIIs. They're continuing their selling spree, nearly 4,500 crores, while DIIs bought about 3,500 crores. So, you know, in terms of FIIs coming in, Niraj, you're arguing that the selling spree is over. Maybe not all of it.
Maybe not. I mean, so again, who's to say, frankly, because these two were not the only ones. But
I'm saying the data every day is showing that selling is on.
Yeah, it's clearly on, and for sure. For now, it is on
since April, to be fair. So there's been
exactly. The only thing is the massive large numbers.
They heard Amit Shah yesterday.
Yeah. So the very large numbers of Wednesday and Thursday are behind, because we do know that now the fund names are known. So Marshall Wace, they Shah, Siganti, etc. The selling, the remnants of the selling from those two large funds seem to be behind. If the dealing rooms are saying, maybe some pieces might be there, because remember, these funds get to lever about 5x. So no one quite knows that while their actual cash exposure or the fund mandate may have been whatever, how much they were levered to. But be that as it may, the belief is that some of this selling, presumably that came in from these funds, is behind. Now, yesterday was a very good recovery day, right? Despite the FI sale day, because 4,000 crores sold, but it was a very good day of recovery, which is a positive. Banks led the way, as Samina, you were saying yesterday. That the problem seems to be that the VIX is still higher, and that's a bugbear. So 2 or 3 messages, including from one of the guests who comes on the channel saying that, oh, this is a suckers rally, people will get sucked into it. But I don't know, let's see. Towards the end of the week, the belief still is in large institutional dealing rooms that the market will be higher from where they were at the start of the trading week. And then you kind of narrow it down to pockets, right? And if you just look at 2 pockets, one, agrochemical stocks, by virtue of what UPL or a couple of others did yesterday, volume growth numbers coming in, even if pricing not there. So that is one. And just look at the action in healthcare, guys. Liquid names out there. Dr. Lal, UPL, you classify agrochem, Metropolis, Cipla, massive gains in trade yesterday in the liquid names. We know that the non-liquid names also did well, but Aurobindo, Lupin, healthcare was a pocket that was a buzz, and you might want to believe.
Defensive play, perhaps, or you're seeing something else cooking there?
I mean, just the commentary that is coming in makes people believe that if volume growth has come back, and at some point of time, if pricing does come back, in US, of course, generic pricing is okay, but in the other markets, in CDMO markets, if pricing does come back, at some point of time, the earnings uptick will be so sharp that people will probably not get a chance to pile in. There is something certainly happening in that agrochem and pharma space.
We've got an upgrade on UPL as well this morning, but just to talk about the option play that's happening. So while you said a number of dealing rooms were talking about a higher close for Friday as opposed to an opening on Monday, maximum call OI is seen at levels of 22,500 for June 6th expiry, which really means that most people are betting that that could potentially be where the action really abates. But what is interesting to note is that if we start seeing that uptake beginning now, then option traders will run for cover, which means that the journey further upward could be very, very likely. But let's not forget that because of your VIX, option premiums are very expensive, which makes it actually it's a tough market, like we say, right? So while you might have some grip on what the direction or the range for the market is, let's not forget if you're somebody who's buying options, you are paying a massive premium. On the flip, if you're selling options, you're eating a lot of premium, but that range becomes a tough one to trade. So keep that in mind. 22,500 is where you've seen maximum open interest, call open interest for June 6th expiry, which really means that the markets start moving up starting now closer to those levels. These traders will run for option cover, which could then take the markets up to new record highs. And that's really what the street is working with. 22,800 is also seeing some action, and so is 23,000. That's on the option side of things, and the fact that the wicks, like we keep talking about the wicks, right? So while you can't play the wicks, what the wicks being higher implies that premium on these options are higher, and that's largely what you want to keep in mind. Tamanna indicated inflation, and I want to quickly talk about that inflation number, because while the inflation reading came in at 11-month low, 4.83 like she indicated, food inflation continues to be very, very sticky. So I think that is something that the street is going to notice. Will have no impact on monetary policy, because all we really need to do is follow the Fed in terms of rate action. But food inflation is sticky. That comes in at a record high of 8.70 versus 8.52. The fuel price cut is what contributed well to the number, and core inflation barring food continues to see easing. So some economists may argue that the economy is slowing down, and hence input costs have been coming off. And of course, you have been hearing order wins have been slowing down over the last couple of months. Also, a quick mention on food we've talked about, and we've talked about the fact that urban inflation has eased or looks much better in terms of inflation than rural inflation. So rural continues to be a concern, important from the angle of consumption stocks, right? Because there is a price pressure coming in for rural India that will impact the way some of these consumption names are doing. So that's on inflation and on the option side. But going into stocks very quickly, a bunch of news driven counters that we should mention about, Shriram being one of them. I've been discussing this with Niraj and struggling to find out how the street would view Shriram Finance's stake sale to Warburg Pincus. A stake sale was on the cards, came in at a valuation which is probably slightly lower than what the street or brokerages had expected. It's come in at 96 rupees per share versus 140, which was a broad estimate that was put out by Citi. So while the valuation may be lesser, brokerages like Citi believe that this will give Shriram Finance an opportunity to invest back into their core business. So if you're a medium to long-term investor, you'd view this as a positive. Apart from that, Morgan Stanley believes that this is such a small portion of their SOTP valuation that the pricing of the deal may not be as good as they'd have expected, hence negative in terms of a reaction today. But again, because the impact of it is so much lesser, the reaction may not be too negative. I don't know if you want to comment on this one, Niraj. I'm thinking...
Well, I think that's probably it.
Yeah, so I guess focus on core business. There have been no upgrades on the stock, so you want to also keep that in mind. The ratings stays the same, but it's a huge cash inflow that comes in at about upward of 4,000 odd crores. 4,630 crores is what they'll get out of it. That is Shriram Finance for you. Apart from that, another two that I want to quickly touch upon is going to be DLF. Numbers were good. You had a few brokerages indicating that those numbers were actually, while the pre-sale numbers don't look great, lots of positives working out for DLF as they go into next year. So revenues are up 46%. EBITDA has also seen a pretty sharp jump of about 90%. Profitability has come in about 60% higher. So all in all, good earnings from DLF quarters. Aggressive buy call coming in the two brokerages that I saw. So impressed, to say the least, even though pre-sale numbers haven't looked good for this one. FY25 will see a good impact of a lot of the luxury projects as well that kick off. Remember, those come with better margins. So if you're doing more luxury, the margins will be there for everyone to see, and that's what you want to see.
I'm just curious on DLF, Samina, because the conversation with a lot of the real estate players has been that more than the top line, bottom line, the pre-sales numbers matter.
Here it really DLF depends on which side of the accounting you're sitting on, right? How much window dressing you're trying to do at this stage.
So in DLF's case, the core numbers look decent, but the pre-sales, as you mentioned, are not as much. So I'm wondering how that's really going to play out, because it's been the reverse.
Seems quite pleased.
It's going to be, it's the reverse for quite a few other players where they've focused only on the pre-sales.
Yeah, I think, but the note also seemed to suggest that Q4 was a miss.
But FY25 is going to be so much
starting
better.
Q1
the pipeline
because of
looks really good.
Also that Privana West.
Yeah, that's what 56 billion. Yeah,
so that might just do the trick for DLF.
And they've also said that the margins will expand, so that is expected to look good. I mean, luxury really is a sweet spot, and I think this is why why it makes sense, right? When you read about all the likes of the Prestige, the Shobha, the Lodhas of the world building all these beautiful, luxurious properties in suburbs of Mumbai, you know why this is getting done.
But it's a difficult one to call today. I mean, there is a miss on the pre-sales, but there is a good
if I have
guidance
to quote
given
Morgan
for
Stanley, and I think they are sitting on the fence here.
Okay.
Lower than expected pre-sales, but FY24 outlook strong. So even they are unsure.
All those luxury apartments, I would really have comfort when I see lights on in all of them. And you know, filled to occupancy, which is a bit of a cycle, but nevertheless.
Just one quick one after that is Chalet Hotels. I'm going to bring this one up because the numbers were good. Revenues were up 20%, profit was strong. Key highlights was that average room rates are up 5%, occupancy stands at 76% versus 74%. Lower tax outgo has helped profits. The stock was down 2.5%. I'd be like to see how this one does. I mean, this has been quite a theme. So the likes of Ilios as well really do enjoy playing the tourism, hospitality sector, which has been in the news for all the right reasons in the last few months at least, guys.
So Chalet is interesting. I'm going to talk about Zomato. Just because it was such a dramatic story towards close. It came in about last 15 minutes of close, and if you just pull up the chart with what happened with Zomato, plunged 6%, recovered to about 3.5–4% down finally. The first cut of the numbers seemed disappointing to the street, below expectations as far as the top line was concerned. But the earnings call highlights are interesting to say the least, and you have quite a few notes this morning. You might see a turnaround in the Zomato story, which is why I wanted to start off with it. So now just a bit of those call highlights, and we will get a detailed report on it as well from my colleague Mihika. But Blinkit, remember, is the big bet for Zomato, and those numbers show that Blinkit has got its strongest positioning in the northern part of the country, but is moving towards more dark stores in the western areas, Mumbai, etc. The business has turned adjusted EBITDA positive. You know, with Zomato, you always see this adjusted EBITDA marker, which is interesting. Aggressive expansion space. They expect the business to maintain EBITDA neutrality and penetrate further in Bengaluru, Mumbai, Hyderabad. The hyper-pure segment is not that great, but they expect improvement in the margins to continue. Just quickly tell you what Nuvama and Citi are saying. So Nuvama has maintained a buy with a 245 rupee target. That's nearly a 25% upside. Remember, for a stock that has already run up massively, you're seeing that in the last 3 months has already run up about 27–28%. Blinkit expansion will impact short-term profitability, but that's okay as far as Nuvama is concerned because it helps cement the business as a quick commerce leader. Blinkit's AOV is also down 2.8% on seasonality. That's Q on Q. They anticipate aggressive store addition to hurt the margin expansion, but that's okay as far as they're concerned. Morgan Stanley has maintained an overweight on Zomato and 180 rupee price target, so not as aggressive as a Nuvama. But they're saying that the consolidated adjusted revenue and EBITDA beat brokerage estimates. We're going to get a detailed conversation as well from an analyst on this adjusted EBITDA business and how the street looks at it. Just to add one more, Citi has maintained a buy with a new target price of 235. That's a 19% upside, 19.5% upside. So you might see some action on a Zomato. Remember, it is a long-term play as well. And once that investor call went through, once the details were out, you might see a change in mood from what it was during close yesterday. RVNL, just a very quick comment on it. It's got an order worth 239 crores from Southern Railways. That's a stock which has been out of favor the last couple of weeks. But that's an interesting sort of a news update, so you might see some action in RVNL. And UPL was the other one. I mean, we spoke about it in some detail yesterday as well, and Niraj, you mentioned it today. The turnaround story which is being anticipated in UPL is what needs to be watched, whether there's more steam left after the 6.5% run yesterday, where on an otherwise poor day, you know, except for the turnaround or except for the change in mood towards the latter half, UPL did fairly well. So now, what are the brokerages saying? Jefferies has a buy, target price of 610, reduced slightly from their earlier target price of 635, but still a 22% upside. The industry headwinds continue in FY25, that is clear. But it seems to be on a better footing once recovery sets in. So that's the game, that how is it relatively placed. Citi, meanwhile, has also rated a buy with an increased target price of 675 versus 650 earlier. That's a 25% upside. The real key factor, that one line I would pull out, is that management has indicated 80% of impact of channel rebates and high cost inventory consumption is behind. So like the conversation we were having yesterday, that is the worst over, maybe not completely in FY25, but all things considered, will UPL be better paced to be at the front of this recovery in the entire agri-chemical space? So UPL continues to be one to watch today as well. Yeah.
Yep, watch out for that as well. You know, the bond, the 2030 bond of UPL, if we had looked at it last night, had the biggest gain since December 2022. I mean, that's a stunning statistic. And for a cheap stock to see that kind of a reaction, maybe it's a post-reaction to the move that we already saw yesterday. But I wonder if that also brings about an uptick in UPL today.
I'm glad you mentioned cheap. The stock has done nothing.
Yeah.
Not just over the last 1 year or the last 3 years. It's been a non-performer. If it wasn't for that 8% up move, its 1 year return would be 30% down.
Yeah.
30% down.
The only thing is in the con call they mentioned that their 4 to 8% guidance seems to be based or is based on no pricing recovery at all. If there is a pricing recovery, which they don't believe will happen.
Price action.
Yeah, but if there is no pricing recovery, or if there is pricing recovery, that will probably add to the 4 to 8% guidance as well.
So I think if you're looking for value, where stocks are not very expensive in this market, which a lot of people are talking about, agrochem is the only space you want to hide under. It's like
probably
a rock.
Yeah, possibly, yeah. Just very quickly, 2-3 stocks. We're way over time, guys, but just very quickly, 3 stocks from mine. JSPL. Good numbers. You could argue that with this margin beat, the stock could well react positively. Brokerages seem to believe that JSPL's numbers, so look at that, you know, revenue at 13,487 crores, the estimates were 11,896, margins up 214 basis points at 18.12%, the Bloomberg estimate was 10.2%, and PAT up 100x. Or 100%, sorry, not 100x, at 933. The estimates, though, were 1133. So on the PAT front, missed a little bit. Brokerages say it's an expensive stock. Valuations are not cheap. In fact, there's a 30% downside as per Jefferies or Morgan Stanley, one of the two. Watch out for Jindal Steel. Good numbers may react positively. Valuations may cap the upside. Aarti Pharma Labs, revenues weren't the best, just 4.26% higher, but margin uptick, 23.23 versus 16.49, as a result of which PAT up 52% at 65 crores versus 42 crores. It's the best ever quarterly result for the company because they scaled up due to utilizing capex, which they had done in FY23-24 for xanthine. And that's why Aarti Pharma Labs could have a field day today. And Shriram Pistons is the third one on my radar. Record high numbers, revenues 856 versus 701 crores, operating margins at 21 versus 19, PAT at 116 versus 91. Stock trades still at about 19 times trailing 12 months EPS. Watch out for this one.
Just 2 more that I want to build on brokerage views. While yesterday the day belonged to ABB from the get-go in trade, this morning there are 2 more upgrades coming in on ABB. So the rally, will be interesting to see how that plays out. One by Nuvama and the other one by UBS. So both of them coming out with very aggressive buy calls on it. Another one that's definitely worth a mention and which has been a theme on the street from all the way from March up until recently has been defense. And HAL has been leading the pack in that sense. This morning, UBS has come out with a very aggressive price increase on HAL, a 44% upside from where we stand right now. Target price of 5,300 versus the initial 3,900 that UBS had set out on HAL for. So they believe the good run is expected to continue. The stock was up 1.5% yesterday. Wouldn't surprise me if we get a gap up on HAL and the gains continue. And that sentiment may spread across to the likes of a BDL, a Cochin Shipyard, which may also see some buying, even though I think there is some order win news on Cochin Shipyard too. So that's what I have. ABB and HAL additionally today in focus.